Okay, let's unpack this. Imagine a world where the very materials around us are evolving at breakneck speed, shaping everything from our cars to how we store energy. Today, we're taking a deep dive into a company right at the heart of that transformation. Gujarat Fluorochemicals Ltd, or GFL.
That's right. We've really poured through their Q1, FY26 earnings call, financial reports, investor decks, the whole lot. Our mission really is to pull out the key nuggets for you, help you understand their recent performance, their strategy, and how they're positioning themselves, especially in these high-growth chemical segments. You'll see how they're not just reacting, but actively shaping their niche in some pretty critical global industries.
Okay, so let's start with the big picture then. GFL just reported some really strong numbers for Q1 FY26. What were the key highlights for you, just looking at that consolidated performance? What's it telling us?
Well, the numbers, they really speak volumes. Consolidated revenue from operations, it stood at 12,281 crores. That reflects a solid 5% year-on-year increase. But what's really impressive is the profitability. Consolidated EBITDA, that grew significantly by 31% up to 344 crores.
Wow, 31%.
Yeah, and that meant margins improved by around 500 basis points, so up to 27%.
Okay.
And the consolidated profit after tax, PAT, that also saw a really substantial increase, up 70% year-on-year to 184 crores.
That's remarkable margin expansion and profit growth. I mean, 70%. What does that tell us about their operational efficiency? How do they manage that?
Well, this strong performance, it was primarily driven by sustained growth in their fluoropolymers business. That's a key area, and also an improved product mix, sort of leaning towards higher value stuff. The management also explicitly mentioned their focus on working capital reduction. Yeah, it decreased from 188 days down to 172 days this quarter.
Oh.
And that's a really clear sign. Improved operational efficiency. It's a positive aha moment for anyone tracking their financial health. It frees up cash.
Definitely. Okay, now let's zoom in a bit on the individual engines driving GFL's performance. First up, fluoropolymers. You mentioned that was key, and this is where it gets really interesting. They actually hit their highest ever quarterly revenue in this segment. What's powering that climb? What's behind it?
Yeah, fluoropolymers really stood out. The segment hit 798 crores in revenue. That's up 16% year-on-year.
To 16%, okay.
And this growth momentum, it's expected to continue, mainly due to increasing sales volumes of their newer polymers. You see, they've secured approvals and commercial orders for these high-purity grades.
Well, it's the specialized stuff.
Exactly. For critical sectors like semiconductors, aerospace, automobiles, the really demanding applications, and the capacity they've added in these new fluoropolymer segments over the past few years, it's expected to reach optimal utilization by the end of this financial year.
Okay, so they're filling up that new capacity.
Precisely. And this raises an important question, maybe. Why is this demand so resilient?
Yeah.
Well, because these products are highly specialized. There are very few global suppliers, really. And they have these long qualification cycles with customers.
Ah, so it's hard for customers to switch.
Exactly. It means demand is largely inelastic to price changes. It's a sticky business, high barriers to entry.
Fascinating. So a really strong moat there. What about fluorochemicals then? I hear there's a new product making waves.
Indeed. In the fluorochemicals business, they're quite excited to announce the commercial production of R32. That's a refrigerant gas.
R32, okay.
And it started in Q2 FY26, which is actually several quarters ahead of schedule.
Oh, really? How'd they manage that?
Through some clever strategic retrofitting, apparently at minimal capital expenditure too.
Yep.
And they aim to ramp up R32 capacity now to 20,000 metric tons in phases by the end of this financial year.
20,000 tons.
Yeah. And with this, GFL now offers, well, pretty much the complete range of refrigerant products, R22, R32, R125, R410. And management specifically highlighted that the pricing fundamentals for R32 are different from, say, past situations like R125.
How so?
They're anticipating sustained firm prices, mainly due to supply constraints from the other large global suppliers. So, good timing for them.
Right, seizing an opportunity. And how are the other segments doing? The specialty and bulk chemicals?
Especially chemical segment, that remains stable. Expected to see steady improvement going forward, so, holding its own. The bulk chemical segment, however, it saw a slight decline in revenue.
Okay. Why was that?
Mainly due to lower caustic soda prices, which is a market thing, and also a planned shutdown of their CMS plant for maintenance. They expect this segment to normalize in the coming quarters, though. Production should be running at full capacity again in Q2 FY26, so likely temporary.
Got it. Now let's shift gears to what GFL seems to be really banking on for its future growth: battery chemicals. This segment is emerging as a real cornerstone, isn't it? And it's tied to some massive global trends.
Absolutely. This is where GFL's story connects to some of the biggest macro developments happening right now. I mean,
Okay.
this segment is being propelled by the global demand for battery energy storage systems, BESS,
Right.
driven by things like, well, large-scale global developments like AML workloads needing huge amounts of power,
Mm.
global capability centers expanding, massive EV infrastructure and rollouts, and of course, renewable energy deployment. All these things are just accelerating the adoption of battery storage. It's a huge wave.
And what's the major catalyst here? Is there a specific trigger?
A major catalyst, especially relevant for them, is a recently introduced bill in the United States.
Okay.
This bill expands subsidies beyond just electrical vehicles to actually include energy storage systems. It offers a substantial $45 per kilowatt-hour subsidy.
$45. Wow.
Yeah, which covers roughly two-thirds of the battery costs, apparently. This makes large-scale battery production in the U.S. not just feasible, but, well, highly attractive.
That sounds like a huge boost, a massive tailwind. But there are also supply chain considerations tied to these kinds of bills, right? It's not just free money.
Absolutely, that's a crucial point.
Mhm.
The U.S. bill also introduces supply chain safeguards.
Oh.
It requires, over time, up to 85% of inputs to be sourced outside what they call the prohibited foreign entity category.
Right, which often points towards diversifying away from certain regions.
Exactly. And currently, the largest supply chain for battery material originates from countries in that category.
Ah.
So this provides an excellent opportunity for GFL's battery material business. They can present themselves as an alternate supply chain option to customers needing to comply. They're exceptionally well positioned, really. They have existing capacities, initial approvals. It gives them a strong foundation for global leadership in this space.
What specific progress have they made on the ground then with these battery materials?
Well, their electrolyte and salt plant commercialization is progressing. That's moving along. And their LFP-CAM plant, that's the lithium iron phosphate cathode active material, it's successfully completed pre-commissioning activities.
Okay, so getting close.
Yeah. And their LFP pilot plant is also now operational. It's actively developing customized grades tailored to specific customer specs.
And why is LFP chemistry so important for them specifically?
That's a good question. LFP chemistry typically has a higher salt consumption per gigawatt hour compared to NMC chemistry, the other main type.
Right.
So as LFP expands, and it's expanding rapidly, it provides a much larger market segment for their LFP SAM products.
Yeah.
The salt requirement for LFP is almost double compared to NMC, so more LFP batteries means more demand for their salts.
I see. So when do they actually expect to see significant revenue kicking in from this whole EV and battery segment?
Well, the current sales are still small, but they expect sales from the EV business to start trickling in maybe by the second half of this financial year.
Okay, starting soon then.
Yeah, but the really meaningful numbers are anticipated more in FY27. That's when qualifications should be finalized and orders really ramp up. They've already invested a lot, 1,300 crores in EV up to the last financial year.
Mm-hmm.
And they plan to add another 1,200 crores this year. That's funded in part by a 1,000 crores equity raise within the EV company itself at a pretty hefty 25,000 crore valuation.
Wow.
And their PVDF binder, another crucial material for EV battery cathodes, that's in the final stages of qualification. Going through scaled-up trials now, expected to be complete by the end of this calendar year. So lots of pieces coming together.
Okay. We've talked a lot about global opportunities. What about challenges, like those recent U.S. tariffs on Indian products? How is GFL handling that? Does it affect them?
Right, the tariffs. So while an additional duty of 15% has been imposed, taking the total up to 25% from 10%, previously GFL actually expects no significant impact on its business.
Really? How come?
Well, there are key products like PTFE, their micropowders, and actually the majority of their battery materials are specifically exempt. They're on reciprocal duty lists.
Ah, okay. Exemptions are key.
They are. Now, the revised duty does apply to a few of their newer fluoropolymers, but as we discussed earlier.
Right, the specialized ones with few suppliers.
Exactly. Highly specialized, few global suppliers, long qualification cycles. It makes it really difficult for customers to just develop an alternate supply chain quickly. Plus, they'd already passed on the earlier 10% duty to customers anyway.
So it sounds like they're pretty well insulated from the direct hit then.
It seems that way, yes, due to the nature of their products.
Okay. So beyond the operational side and market dynamics, what about Any interesting corporate governance changes or strategic structural moves? Did anything notable happen there this quarter?
Yes, actually. The board meeting on August 5th, besides approving the results, noted some significant corporate actions. They appointed Mr. Sunil Kumar Singh Chauhan as an additional and whole-time director. He's got like 29 plus years in manufacturing ops and project management. Seems like a strong hire. Concurrently, though, two other whole-time directors, Mr. Sanath Kumar Moparala and Mr. Niraj Kishore Agniotri, they tendered their resignations.
Oh, okay. So a bit of a leadership shuffle.
Looks like it. The company also announced it's shifting its registered office from Gujarat up to Himachal Pradesh.
Interesting. Any reason given?
Not detailed in the materials we reviewed, but it's a notable administrative change. And there's also a composite scheme arrangement, which was approved back in October 2024, that's underway. It involves demerging a wind business and amalgamating it with their holding company. There'll be some share adjustments involved there.
Right.
And interestingly, GFL also sold its 57 millibu captive wind power plant for 200 crores.
Sold it. But aren't companies meant to be investing in renewables?
Well, yes, and despite this divestment, they are investing heavily in renewable energy. They've put close to 190 crores as equity into a much larger 450 millibu renewable energy project.
Ah, okay. So selling a smaller one, investing in a bigger one.
Exactly. They expect savings from this new project to start accruing from Q3 FY26, with the full benefit around 150 crores per year expected in FY27. And 50 millibu of that new project is already operational. So it's a strategic shift in their renewable approach, it seems. Makes sense. So pulling all this together, what does this all mean for you, the listener, looking at GFL's long-term path? How are they setting themselves up for sustained growth? Well, the management seems very confident. They're focused on delivering sustained growth by really pushing on three main fronts. First, incremental sales of those high-value added products in fluoropolymers. Keep building on that strength.
Right.
Second, significant revenue increases from the R32 business in fluorochemicals, leveraging that early launch. And third, of course, the major ramp up in the battery material business. That's the big future play. They highlighted that most of their battery material products will have commercial scale facilities ready literally in the next quarter, just undergoing final qualifications now.
So the timing looks good.
It reflects a very clear strategy, leveraging their integrated facilities or R&D expertise to really capture these opportunities in specialized high-growth markets, playing to their strengths.
And their commitment to sustainability seems pretty evident too, which is increasingly important, isn't it, for investors, for customers?
Absolutely. It's woven into their narrative. GFL is actively working on things like product carbon footprint reduction, decarbonization initiatives, energy efficiency. They're aiming for ISO 5001 certification. They already have numerous certifications. ISO, IATF for auto, SA 8000 for social accountability.
Okay.
And they publicly report on sustainability through all the major frameworks: UN Global Compact, IRSC, BRSR, CDP, EcoVadis, DJSI. They're ticking the boxes. They've also received awards: Top 50 Happy Company to Work For, Sustainable Organization of the Year, recognition for CSR. It paints a picture of a holistic approach, a company building for long-term value, not just chasing the next quarter's results.
Right.
We've certainly journeyed through a lot there. GFL's Q1 FY26, uncovering that impressive growth in fluoropolymers, the strategic launch of R32,
Yeah.
and this really ambitious future they see for battery materials. It's clear they're making very deliberate moves, aren't they? Capitalizing on these shifting global demands. They seem like a chemical powerhouse adapting quickly.
Indeed. I think their ability to, swiftly retrofit for R32 production, that stands out. And their advantageous position now in the U.S. matter and material supply chain, thanks to those subsidies and the safeguard rules, that's potentially huge. And just their consistent focus on these high barrier to entry specialized chemicals, it really speaks to their adaptability and strategic foresight and underlying technical strength. Definitely. So as you reflect on this deep dive, maybe consider this provocative thought. In a world that's increasingly worried about supply chain resilience, about diversifying sourcing, how might GFL's unique position as this technically advanced alternative supplier in critical chemical and battery material markets, how might that actually reshape global manufacturing flows? Could it impact long-term industry leadership in ways that go beyond just their own bottom line? Something to think about.